Does moving averages work? Are they reliable? And can I use it to become a profitable trader? These are the questions that might be keeping you awake. But in this video, I will break everything down. I will explain how to trade with moving averages. At the end of this video, you'll be able to know if it is good to use moving averages as a trader. I am James Reje. I am a forex trader and I teach people how to trade forex or any financial market. So if you want to learn trading all for free, make sure you click the subscribe button, turn on the notification bell and like this video so you get notified anytime I drop a new video like this. Without further ado, let's jump in. For beginners, you must have seen a chart that have some lines, or you might think that they are drawings. These are not drawings, they are moving averages. Now, what is moving average? A moving average is a technical indicator that calculates the average price of a market over a specified period of time. This moving average will now plot these average periods on the chart, creating buying and selling opportunities. So now we have three types of moving averages. We have simple moving average, exponential moving average, and weighted exponential moving averages. I'm not going to waste time explaining all these things, but I recommend if you want to trade with moving average, use simple moving average or exponential moving average. Me, I use exponential moving averages, but moving averages have different periods. We have moving average period 9, that is 9 moving average. We have moving average period 8, moving average period 21, 50, 100 and 200. Depending on the trading type you are, you can use moving average of any type. If you are a scalper, use moving average 9 or 8. If you are a day trader like me, use moving average 9 and 21. But if you are a swing trader, you can use any moving average higher than 50 moving average or 100 moving averages. Now, how do you trade with moving average? For you to understand how to trade with moving average, you must first understand how to read these moving averages. When the moving average is sloping up, or when the price is above any moving average, it means uptrend. But when the moving average is sloping downward, or the price is below the moving average, it shows downtrend. Moving averages can help you to spot the trend of a market. That means if a market is trending up, the moving average will be sloping upward and the price of this market will be above the moving average. But if it is a downtrend, the moving average will be sloping downward and the price of this market will be below moving average. And also, you can use moving average to know if a trend is consolidating. Please, if you are a beginner, don't trade a consolidating market. If a moving average is flat, it means that this market is consolidating. So we are going to open the chart to identify uptrend, downtrend, and a consolidating market using moving average. To spot an uptrend or downtrend using moving average is quite simple. This is Euro USD on 4 hours time frame, and the moving average we have here is 200 exponential moving average. So now, as you can see, the moving average is sloping upward and the price is above the moving average, which shows uptrend. So now all you have to look is for buying opportunity because this is uptrend. This moving average is simply showing us that the market is trending up. And if you swipe again, you can see the moving average is now above the market and the market is below the moving average. Meanwhile, the moving average is sloping downward. So here the moving average is simply telling us that the market is downtrend. So we only look for a selling opportunities. So that is how you can use moving average to identify the trend of the market. Now, how can you find trading opportunities using moving averages? Number one is moving average crossover. This involves using two moving average periods. Example, 50 moving average and 200 moving average. If the 50 moving average crosses above 200 moving average, you go buy. But if the 50 moving average crosses below 200 moving average, then you go sell. Always keep in mind that if you want to trade moving average crossover, Go long whenever the short-term moving average crosses above the long-term moving average. Example, if 9 moving average crosses above 21 moving average, then go buy. If 9 moving average crosses below 21 moving average, you go sell. This moving average crossover strategy can give you a lot of trading opportunities if you master how it works. Now let's see the charts. So this is 50 moving average, period 50 and 200. The one on red is period 50 and the one on black is period 200. So we have moving average 50 and 200 on Euro USD 4 hours time frame. So as you can see from here, we have uptrend because the moving average are sloping upward, but here the crease crossed. See, the 50 moving average crossed below the 200 moving average, signifying a selling opportunity. So had it been you sold here, you could have made insane profits. This moving average is creating a buying and selling opportunity if you trade them wisely. For example, now if you want to trade this and you spot a crossover, then the next thing is to spot a resistance or support area. As you can see here, they broke the support level here and there was a little fight here. So had it been you just sold here, you could have ride down this trend because this crossover shows the end of uptrend and the beginning of downtrend. You see how you can use moving average crossover to find trading opportunity. The second way to trade with moving average is using it as a support or resistance area in a trending market. In an uptrend, and the market retraced back to moving average and rejects it or bounces off from that area, this shows that the moving average is acting as a support area. So you go buy or you look for buying opportunity at that moment. Or if the market is trending down and retrace to moving average, reject it or bounce off, it shows that this moving average is acting as a resistance area. So you sell or you look for a selling opportunity. This is the one I use most of the time because it works for me. That being said, you can use moving average in uptrend as a support level. So whenever the price comes back to this moving average, you look for buying opportunity. Or in a downtrend, the moving average can act as a resistance level. So whenever the price comes back to this moving average and rejects it, then you go sell. So we are going to open the chart to see how we can find trading opportunity using moving average. How to use moving average as a support or resistance area. So you can use moving average to trade as a support area in uptrend and as a resistance area in downtrend. You can see the market moved above the moving average and retraced back to it. Now it bounced off. This shows that this area is a support area because it bounced off from this moving average. So immediately you're supposed to go buy. You can see here the market retraced back to the moving average and bounced off immediately. This shows that this moving average acted as a support area here. So look for buying opportunity here. But as you can see here, we have no rejection here or bounce up. The market didn't bounce up from this moving average. Instead, it broke below it. Now, if you look at something here, you can see when the market broke it, it retested it, showing that this moving average is now acting as a resistance level. Now, you can start looking for a selling opportunity because this is now a downtrend. So you can use moving average to spot a resistance or support area in trading markets. At the beginning of this video, I promised you that I would tell you truth about trading with moving average, and this is it. Moving average may not work for you if you don't know how to trade it. My advice is don't trade the moving average in isolation. Don't buy or sell a market just because the market is rejecting a moving average. You can combine other confluence like support and resistance areas, price actions, fair value gap, or whatever strategy you have. That being said, I do not recommend moving average for beginners. If you want to try moving average, make sure you try it using a demo account, master how to use it, before you start using it. And the most important thing is, don't trade moving average in isolation. Don't trade only moving averages, because most times they can produce false signals. So add it up with any other strategy you have and increase your winning rate. That being said, if you want to see other trading strategies or trading tips that can help you to increase your winning rate, then subscribe to this channel, turn on the notification bell so you can get notified whenever I make a new video like this. For now, goodbye, good luck.